All right, and welcome everybody to this month's Investing in Identity Forum. I am Travis Jarae, the CEO and founder of OWI. We're a research and advisory firm focused on the identity, trust, and data economy. We do a few things here at OWI. We do growth strategy, transaction services, product innovation and design, as well as a handful of other things around market intelligence in this space. And for that, I want to go ahead and welcome you guys to the Investing in Identity Forum. We have our typical speakers. They're not just today's speakers. We have Cameron D'Ambrosi, Managing Director here at OWI, as well as Dave Fields, Partner at PTB Ventures. And let's go ahead and jump into it. So July, very interesting month. I think that when we were kind of going through the deals of this month, we were trying to say, what really kind of shined. And then, frankly, quite a bit, actually. So once you start shaking things out, you see kind of all over the map some really great investments. It's Me taking in 24.7 million, Dodomi taking in 40 million, Smile taking in 7, Authentic ID announcing $100 million as of yesterday, which is this recording is on Friday. So that was yesterday, Thursday. And then Quantexa taking in 153 million bucks to build out some of those AI tools. So lots of money coming into this space. A lot of this is actually not really core identity the way that we think about it, but a lot of those tangential and adjacent kind of service offerings. We're going to dig into those here in a second. And then for the notable M&A, there was a lot going on, but I think there are two notable deals that are worth kind of taking away from this month. The first is Signicat acquiring the Spanish EID. This is very, very interesting for a number of different reasons. One, we've talked about Signicat pretty much on every single one of the Investing in Identity forums this year in some form or fashion. Obviously, these guys are switching back and forth between a mover and shaker and notable M&A. And then, of course, the large acquisition from Zoom of Five9 to start building out some of that customer engagement platform, but also around kind of those voice biometrics, something, again, we're going to dig into here in a second. So with that, I'm going to go take it to the map. And of course, if you guys haven't seen this, is the first time coming to an Investing in Identity forum. This is our identity landscape. You can check this out on our website, download a copy, as well as kind of see more about how we break down the landscape. What are these colors? Why are they positioned in this way? What do all of these things mean? All of that there can be found on our website, oneworldidentity.com. So I do implore each of you, if you're looking at this for the first time, to go check that out as well. And so let's look at It's Me. So clearly falling into the authentication identity wallet side of things. Cameron, why is this deal important? Why are we calling it out? And first off, who's It's Me?
So a really interesting platform. You could almost think of them as a super group composed of 7 of the largest banks, as well as telecom providers in Belgium. Started off in Belgium. They have now launched in the Netherlands as well. The other interesting aspect about this investment is that it is from Belgium's federal holding and investment company that invests, taxpayer dollars on behalf of the government of Belgium. So they've got really strong backing from basically kind of the 3 linchpins of, issuers of identities. The people who know what your mobile device is doing, the people who are controlling your money, and then the government itself. So they've seen really strong user growth, really strong transaction growth on their platform. And because of that association with the government and tie-ins to the telecom and financial services industries, they started off with a really, really strong network of end use cases. We talk a lot about the chicken egg problem of launching a successful consumer-facing identity wallet. The fact that you can do things like open accounts and tie your profile to your mobile device super easily and quickly, as well as tying in your government issued EID, makes this platform extremely compelling. And we expect to continue seeing them grow pretty rapidly across those Dutch and Belgian markets.
Yeah, I think this is extremely interesting to see these consortiums kind of play out, and it's something that we've been seeing for quite some time, last 10 years. I know, Dave, you have some thoughts on kind of the consortium play. What kind of does this mean for you?
Yeah, I think we're going to see more deals like this. I think there's growing recognition that if you look at proverbial big tech or GAFA, There's recognition both within telcos as kind of core providers of consumer identity with their network infrastructure, and then banking, which is all the transactional and payment and credit flows. That they've got to do a good job of competing for identity wallets and identity share. Otherwise, a lot of those economic flows are going to accrue to GAFA, right? And so we're going to see more of this. I think this is on some level, certainly a smaller scale, but we've seen this in the States with something like ZenKey, right? Where we have all the big telcos trying to create an effort to go after passwords in the consumer context. So, the basic idea here is everybody shares this problem. If you're in this industry vertical, everybody shares this problem. And it's not actually just that you're competing within your vertical, but really actually that the bigger threat at this point is adjacent verticals. So consumer tech is competing with telcos and competing with banking. And so it makes sense to come together as a consortia, externalize some of your development costs, which are shared amongst everyone, start to pool data, which is then both a resource that can be used for, data science purposes, for training AI and ML models. And then you've also got like a broader go-to-market, platform that can be used to try to bootstrap some sort of network effect. And so that to me is the high-level strategy or thesis behind something like this. We'll see. If I were to bet, I would say we're going to see these efforts be successful in certain geographies and jurisdictions, and we're going to see it be less successful in others. And it's just one of those things that's going to play out over the next 5 to 10 years.
Yeah, I think that's exactly right. And also I would comment on some of the investors for It's Me, Proximus and Orange. Proximus, of course, being the owner of Telesign, who's obviously quite successful in the identity space in their own right. So obviously a bit of experience from the some of those investors coming into this has some legs. Well, I think this is going to be really exciting to kind of watch these guys, kind of build this out. And let's just go ahead and keep moving on here. We have actually quite a few deals here, but next one is Dodomi. So Dodomi consent management platform. So these guys are coming out of France. Very, very interesting company, 40 million bucks coming into this Series B round from Elephant and Briga. I think this is a really interesting take for the consent management platform game. Obviously they've been quite successful doing billions of transactions throughout Europe. This money is to expand into the US. So kind of looking at this as kind of some direct competitors to many of those companies out here in the States doing consent management. I love this space. I think, obviously this is a golden cog on our landscape. We see this kind of being a natural fit for a lot of add-on services. As well as a really great fit as a platform to bring on a lot of other identity services in the future. I think the big problem areas here, and I'll go ahead and credit Howard Hall for this one, who might be listening. He's managing director over at Consult Hyperion, where consent is still one of those things that a lot of people don't really care about. And even though your T's and C's are something you're still signing, a lot of laws dictate that you need to kind of maintain those consents and T's and C's and sign off on when your data is being used across different use cases, but people still don't really care about it. It's just still something that we just click through. So finding the importance, or at least creating the importance for the consumer, is still something that's lagging in this consent management space. But with companies like Dodomi, I think that they're going to at least let companies be successful and compliant. So maybe we'll see some other startups focusing on that education gap in the future. And then Smile Identity. So we love this company. Mark Straub, obviously, we've talked about Smile in the past on this forum. Raised $7 million, and this money came in a little bit ago. Dave, this is actually a portfolio company of yours. So I'll let you give a little bit about Smile and what this money is going towards.
Yeah, so Smile Identity is really a customer onboarding tool, really focused at this point largely on Africa. We'll also be looking at some other kind of growth markets here in the near term. You hit on Mark Straub's. I guess I'll talk. Maybe this is a good time to add a little bit of context around VC investments and analysis and things of that sort. So Mark Straub's background was actually a venture capitalist for a while and worked at worked with Vinod Khosla. He was really, helped set up and run Khosla Impact for a while, which was really focused on using technology, in emerging markets for financial inclusion, health inclusion, all sorts of things, but really focused, on a much more emerging market strategy. And so Mark had a couple portfolio companies where, you've heard this before, were burned by identity fraud. And so he saw the problem across multiple companies. As a VC, kind of one of my easy filters for when I start to talk to somebody about identity is like, what is your emotional attachment to the problem? Or why is it that you're interested in this? I think particularly in the last kind of couple years, you saw this especially in the blockchain space around 2017, where a lot of people were attracted to identity because they thought they could use blockchain to make money in it. And so there was a good way to say, well, like, why do you care? Like, how did you get interested in this problem? Is it because you went to a blockchain panel and heard somebody talk about identity? You're like, yes, I can make money doing this. Or were you actually burned or scarred by the problem itself? And then thought about going, okay, well, how do I fix this? And so, this just, I've said blockchain a couple of times. This is not a blockchain play, just to be clear. This is not we're not focused. That's not where our focus is. But just one of those clear sort of filter screening criteria. Mark is somebody who's been really focused on some of these markets and saw the need for infrastructure that's really built for these markets that's meant to run on mobile devices. And so what does that, ultimately mean, right? So Smile Identity as a company is really, is KYC and doc verification focused. But then in addition to those sort of just traditional things of, can I use the camera phone and some machine learning to tell if this is a good document or a bad document, and then does the selfie match the document? They also then spend a lot of time, have boots on the ground, and I think 8 different countries now. That's going to be growing, in the near term over the next 6 to 12 months, and really then focus on how do we then integrate with local ID authorities and local data sources to provide all of the different customer onboarding information that's required for sort of that mobile fintech wave that we're seeing in Africa in particular. And so that's really where we're focused and positioned at this point in time. I think one of the things that's interesting about about Africa and some of these other markets is because there's not this sort of existing and legacy infrastructure. There aren't legacy players, whether it's the credit bureaus or all these other companies that are out there that kind of provide a lot of this information and data flows already. That it's potentially a little bit more of a greenfield opportunity, and that we can Smile Identity has an opportunity to work with both kind of like the fintech community as well as like local governments to say, well, like, look, how do you want this infrastructure and tooling to look? And so that's both that's both an opportunity and it's a risk at the same time. But it's a company I'm very excited about. Led the seed round a couple of years ago, and so we're excited to have now raised an A and kind of expand our geographic coverage over the next couple of years.
That's great. And I think, if you guys have any more questions about Smile ID, you can reach out to Dave. I know Mark is quite active. Obviously, you can go through their channels there. My quick story on Smile is I met Mark when we were still living in San Francisco, so now 4 or 5 years ago at that point. And he gave me a demo, and he brought multiple phones to the demo. And I really appreciated it as someone that was building products at Google for emerging markets as well as markets with the traditional smartphones that we use every day here in the States. It's a big problem to build across devices and build across geographies. And I think they kind of took that approach in the beginning, which I fully approve. So with that, let's jump actually into Authentic ID. Again, $100 million minority stake coming into this from Long Ridge, so private equity coming into to Authentic ID here. These guys have been raising money for some time. We've kind of heard about this fundraise for 7 or 8 months going on. Excited to see that kind of complete and those guys start to build this out. Blair Cohen obviously Good to see him kind of, rock this one and build a company that is doing very, very well. Lots of really good market traction for these guys. Dave, I'm going to ask you actually to continue on this one. What are your thoughts on Authentic ID?
Well, so there's a couple of things, I really look at this from the macro perspective, right? Which is $100 million rounds just in VC or growth equity used to be perhaps not rare, but uncommon, right? And if you follow some of the VC or like startup newsletters, like a Pro Rata or a Term Sheet, they used to call out, it would be a big headline when you had a company raising $100 million. Whereas now they kind of bifurcated into like massive raises, still big raises, and then like raises, right? So it's interesting to see as more money is just very broadly flowed into tech, how people have started to bifurcate this. And so I now bring this to identity, which is to say, has there been a month now where we've done this webinar where there hasn't been at least one $100 million raise in this space? And so it's just kind of that awakening or explosion where, money's flowing. It's going to continue to come into this space. And it's really unclear to me right now where I think it would be to say that it's bubbly is I think it would be too far out to one end of the spectrum to say we're in a bubble, but like there do seem to be some elements of like, wow, it feels like it's starting to get a little frothy to me. At the same time, it could also just be validation of the importance of the market. And we've seen over the last 10, 20 years that markets have actually underpriced just how big and important just digital transformation is broadly. So it could be that all these companies are going to make it and get there. It is interesting to me that, again, we see a more traditional sort of like growth equity or PE player, not somebody who I think is typically thought of as being in the sort of VC like game, making an investment like this. They are going to be competing with a lot of VC-backed companies. And so I think that we spoke about that a little bit last month with how we see certain sort of PE-backed platforms being used to do roll-ups in the space, competing with companies pursuing that very traditional VC strategy. So this is another deal that I would kind of put in that more PE or traditional PE bucket versus the VC bucket. And let's see how it plays out. I think this will be a company and a deal that we look back on probably about 24 months from now, and we can start to see is that PE playbook working, or is the VC one continuing to like just win out and be dominant? And that's just something we just got to wait and see.
Yeah, I think that's a really good point. I know a lot of people are talking about how frothy, I'll say the words. People are saying this market's too frothy. People are saying we're in a bubble. I don't think so. I know we've gone back and forth on this before, but these we had 14 deals this month. So not a lot of deals. I mean, other months we've seen 20, 30 deals, 14 deals for $1.7 billion in July so far. And that's not including Zoom. We took that one out. Obviously, that's it's a little bit too big and a little bit too outside the identity scope, but a lot of money. And also, but it's also worth mentioning that a lot of these are coming with secondary transactions coming in that number. People taking some money off. A lot of people have been at this game for 5-10 years without seeing a lot of money come in, and they're getting paid early to continue growing the company. So it is, it's one thing to kind of call out as well as a lot of this money that we're seeing come into the space isn't all going to the balance sheet. A lot of it's coming off the balance sheets in the form of secondary transactions as well. So let's move on to Quantexa. Cameron, we talk about these guys a lot, but for our audience here that might not be familiar, who are these guys? And I mean, they're all over the map. So I think we all should know a little bit about these guys.
Yeah, Quantexa, a really interesting platform. They are trying to kind of break into what has historically been a pretty steady and lagging space technologically, which is helping financial institutions solve these, KYC onboarding, regulatory compliance, transaction monitoring, data aggregation, data management challenges. Historically been dominated by large players, your NICE Actimizes of the world, Oracle, Mantis, not exactly known for being on the cutting edge of, AI and ML, a lot of rule-based technology. a lot of alignment with making sure, can the regulators know exactly what we're doing? Can we retrace our steps to kind of prove out exactly how we flag the transaction? The market is shifting. Regulators now becoming more tolerant of AI ML that can parse, many, many more signals and many more types of data than these traditional rule-based models. Quantexa at the leading edge of that, doing a lot of interesting work in terms of synthesizing not just kind of these traditional identity data sets, but also pulling in lots of alternative data and helping to, do entity resolution, graphing of relationships using that AI ML and uncovering trends that some of these legacy systems may not have been able to pick up. So I think it's almost an interesting bridge, if you will, if we think about, the world where we have pure deterministic data, this other side of the coin, as we call it on the market map, where probabilistic data making a big impact. Quantexa, in many ways, sitting at the interface of those two worlds to really help bring financial institutions more into the future when it comes to how you are leveraging not just kind of traditional identity data, but taking a forward-looking approach to deriving new insights and flags for risk and other types of activities from these probabilistic models.
Wrong button there. But yeah, I think this is really interesting from a company's perspective. I mean, we were actually kind of laughing about it. We had master data management on it. Cameron's like, do they do that? Do they really do master data? I was like, yeah. So one of the companies in the space that still does master data management and claims it, I think is just an interesting call out. You don't really kind of see a lot of the MDM companies kind of doing both that really, really well as a lot of the deterministic side of things down towards the lower part of our landscape here. Signicat and EID. Signicat has been on the board here now for 3 months in a row. Last month, of course, they acquired NCAP Security. This month, they are acquiring EID. This is not super surprising. Signicat took in some pretty large money from private equity and is now spending it, right? I think this goes in line with our consolidation of the EID market. Different than EID, the company, but more of the EID programs that we're starting to see with identity proofing and government authentication throughout Europe. So this acquisition really kind of places them pretty well in the Spanish-speaking markets, which I think Signicat was extremely strong in a lot of the Nordics, a lot of the English-speaking countries throughout Europe. So this extends them down into Spanish-speaking countries. Great acquisition. Really excited to see this. Signicat still, I mean, corp dev guys over at Signicat, high five. Keep up the good work. You guys are obviously picking some winners. It's very clear the strategy that you guys are playing out, and I think it's a very strong one to kind of continue to watch. So if you guys are adding Signicat to your news feeds, your RSS feeds, make sure you guys are, if you're not already. These are a company to watch and see what these guys continue to do. Obviously, they are a leader in the space, especially in Europe. So that takes us to the last but not least, the Zoom acquisition of Five9. Turning it back to you, Cameron. Why is this one on our map here?
Yeah, I think this signals that Zoom is taking this post-COVID transition seriously, thinking about what their platform can and should be with regard to a world where hopefully we're not conducting 90% of our business meetings on our computers via Zoom. So Five9 does a bunch of different things, a lot of kind of call center operations type technology that may be a bit less relevant to this conversation. But more critically for this discussion, they do a lot of work in terms of helping call centers and organizations understand the identity behind who is interacting with their platform via voice biometrics. And I think it's a really interesting signal, doing a bit of tea leaf reading here. But this is a way that Zoom can begin trying to tackle some of these use cases that maybe have been dominated by traditional telephones, either landlines or mobile phones, and allowing Zoom to insert identity more directly into their stack. to offer businesses the ability to use Zoom for interactions and pass along identity credentials underpinning those relationships. So curious to see how this shakes out and to what degree Zoom, integrates these features fully into their platform once they kind of digest this acquisition. But I think it speaks directionally to where they want to go, and that is bringing identity more into the center of their stack and enabling identity linked experiences in a very real way.
Yeah, I think it's super interesting. Zoom obviously has carved out this incredible position as really being the sort of communications identity in the workforce context, right? Obviously, well, now we've seen a lot of it also in social settings and even some, school settings, but largely Zoom allowed the economy or like the work from home economy to really function and flourish during the pandemic. And so now it'll be interesting to see if Zoom can become the equivalent of that sort of single sign-on credential for communications use cases, almost like an analog to the way Okta helps you sign on to all the different software applications you use to get your job done. Can Zoom become a broader communications credential for workforce settings? So that's how I look at it.
Yeah, very, very, very interesting. And so if you're counting again, if you need the quotable from this month, guys, 14 deals, $1.7 billion coming in July as of July 23 here. It's me, Dodomi, Smile Identity, Authentic ID, Quantexa, kind of our big shakers and movers. And then, of course, the acquisitions with the M&A activity with Signicat, EID, and then Zoom with Five9. Month's not over yet, so obviously, definitely subscribe to our newsletter, and you'll be getting more information about some of those deals, and you can kind of track it on our website on a weekly basis as well. So let's go ahead and move into our main topics of discussion this week. We are going to be covering two things. One is buy now, pay later, and then some expectations around the pandemic. So BNPL, kind of the hot topic for July. I think it's been a hot topic, frankly, for a while, but more every day it seems like this is what's on everybody's RSS feeds. This is what's on everybody's tip of their tongue. Everybody wants to get into the buy now, pay later game. But what the hell is this thing, Cameron? You've been following this market. Tell us about buy now, pay later, and you obviously have some companies here on the slide that you want to talk through as well.
Yeah, so buy now, pay later is a really rapidly growing space, really interesting market, because I think it's not necessarily obvious how much of a shift it is from traditional payment methods. I know when I had first started, seeing the buttons pop up, I thought, oh, this is just somebody trying to get me to take out a credit card. And that's not the case. It's actually unique in the fact that it has enjoyed a nice little regulatory carve out due to how they are approaching these transactions. So in a nutshell, how most of these buy now, pay later platforms work is when you get the option as a consumer to buy now, pay later, they'll say, hey, you're looking to buy a laptop. Do you want to split that into four payments at 0% interest? You say yes. That buy now, pay later platform actually runs a risk evaluation on you, the consumer. Once you get pre-approved and you check out, they pay the merchant. They charge that merchant what they call a merchant discount rate. That's typically between 2 and 6%. So that's kind of replacing the traditional card interchange fee. In exchange for that fee, the retailer now has zero risk of chargeback. That payment is guaranteed from the BNPL vendor. They get full payment for those goods up front. The good gets shipped to the consumer. And now the burden of collecting that loan is out on the BNPL platform, and they split that up into 4 chunks and go and collect that from the consumer. If everything goes, hunky-dory, 0 interest. If the consumer misses some payments, they will start changing some late fees. Now, this is a really interesting value proposition for both consumers and the retailer platforms because of the costs involved. For the consumer, you're getting 0% on your purchase. And for the retailer, you have effectively eliminated the risk of chargebacks. Now, as we know from some of the dives we've taken into the chargeback space, the costs of insuring a purchase against chargeback risk for a platform can be close to 1% of the purchase price Then when you staple that on top of the card interchange you're paying, that 4 to 6% that you might pay a buy now, pay later platform could be roughly in line with your costs for a traditional credit card transaction. And you have basically guaranteed conversion because if they pre-approve that consumer, you have no more risk. So really, really interesting how they've developed this market. And I think what's so exciting about it from a digital identity perspective is that this market would not exist without the ability to, in near real time, do digital identity verification of these potential customers, as well as near real time risk scoring and decisioning. So, the AI ML technology that started off in the fraud prevention and risk management space is really underpinning each and every one of these platforms, because you cannot have a functioning BNPL platform if you can't instantly offer the consumer the ability to buy the good. It's not click this button and we'll get back to you in an hour. It's click this button and we will push the purchase through immediately. Now, what does this mean in terms of the competitive landscape? There are a number of platforms out there, Affirm, PayPal, big leaders in the US, Klarna coming out of Sweden, now big in the US as well, Sezzle, many others, Zip, QuadPay. There's dozens of these. And you can see that the market is really shaping up to be quite competitive, specifically around how legacy financial services players are looking to get involved in the game. You see with this Sezzle investment from Discover, Discover is now going to integrate Sezzle BNPL options into all of their merchant acquisition contracts. You see with Apple Pay and Goldman Sachs, they started off offering that Apple Pay traditional credit card. They are now poised to launch what I believe is being termed Apple Pay Later, which is essentially going to be a BNPL product. Anywhere you see the Apple Pay button, pay with Apple Pay on a mobile device or tap to pay, you should be able to do an Apple Pay Later installment plan that you've initiated directly through your phone with a fantastic user interface. So I think these deals and the pulling in of the traditional kind of legacy financial services players shows you that the credit card companies and the traditional banks have seen this encroachment on a space that they had traditionally owned, which is that point of sale. They're not taking this lightly, and they want to make sure that they are getting in this game. Now, Klarna, to my knowledge, has not struck a deal with any of the traditional financial services providers. However, they did take a giant check from SoftBank. So they have a tremendous war chest, and we expect them to be deploying this war chest in the coming months. Wouldn't be surprised to see them potentially making some acquisitions in the digital identity space, going back to BNPL as a major tailwind for digital identity, whether it's identity verification, whether it's fraud prevention and risk management, whether it's transaction monitoring, whether it's mobile and device intelligence. All of these technologies are critical pieces that enable this ecosystem to flourish. So it wouldn't surprise me if some of the more well-funded players like Klarna begin making some tuck-ins, taking some players off the board to bring technology in-house, potentially cut the legs out of some of their competitors and get a leg up. Because when you look at how these platforms are going to succeed, obviously fast decisioning is one piece, but two, making sure that your risk model is as tight as possible. Losses for some of these platforms on the credit side are estimated to be as high as 10%. Bringing that down is going to be critical to having these platforms be sustainable and not just burning piles and piles of Masa Son's money.
That was great, Cameron. Yeah, I think this is a really interesting space for all of the things Cameron just talked about, but kind of really keying in on the impact to the landscape. Fraud and risk players, if you think about the kind of the honeycomb, obviously that is a really big bucket that we don't have split out in many different ways, but almost every single one of them has a buy now, pay later play. Right. So every company across kind of our landscape, especially in the fraud and risk prevention side, the identity verification side, thinking about BNPL and how they can make this one of their big next plays alongside things like gambling and other e-gaming and other sort of big use cases online that we've been talking about for quite some time. All right, let's go ahead and move on to the next topic here, and this will be Dave. We wanted to talk a little bit about the coronavirus pandemic, where we are with things. We have a why don't you just take us away?
Yeah. So look, I think there's a couple different points to make here. Some of this is catalyzed by kind of the recent announcement in France around the requirement for COVID passes, and I'll jump to what that is in just a second here. That is a fine graphic, well done, graphics department. Previously, when we've talked about kind of how much funding is now flowed into KYC, and I've previously found like the different drivers of that, which is there's kind of that immediate, there's the treating the symptoms, right? And the symptoms of COVID where, we're all stuck at home. And so that led to, for sort of the baby boomer or this, some of both the elderly population, but then also kind of like the baby boomers, you have this adoption of digital marketplaces, e-logistics, grocery delivery, Airbnb, things that digital banking, whether that's Zelle, contactless payment methods, were being adopted by cohorts where penetration had previously been very, very, very low, right? So we've seen older people in the U.S. and globally start to behave more like millennials and exennials and whatever all the other funny names are. So that was kind of the first order effect, and then obviously for the younger people, it was a lot of people investing in Robinhood and crypto and stuff like that. So like, what were people doing while they were stuck at home? That was really like the first order effect. And so that both of those things, Instacart, all these other things, whether Instacart, Robinhood, Coinbase, all of these things to onboard all those users, there was a ton of KYC and identity verification required to onboard those users. Now I think we're starting to move into sort of the second order effects of the pandemic, which is going to be what are now the new technologies and new products that are specifically being built right now to handle this, that also are then going to have more generalizable applicability to sort of other parts of the economy and just general life, for the decades to come. And that's both like the pandemic's going to be here for a couple of years, but then also we're going to have different ways of traveling and moving through physical spaces. And what is the infrastructure that we're going to build out for treating the pandemic that's then going to have more generalizable applicability? So that's kind of the core big picture thought that I'm thinking more about these days. Now, specifically, like, why did I select or why did we select, France and to highlight this? So France recently announced that they're going to have they're going to require a COVID pass. I don't think it was called a COVID passport. I think it was just called a COVID pass for basically any activity in public spaces. So that's malls, restaurants. If you want to travel on trains, planes, and automobiles, whatever, you're going to require a COVID pass. Now, interestingly, what that COVID pass says is you've either been vaccinated or you've had a negative PCR or antigen test within the last 48 hours. So they're not requiring people to get vaccinated, and you can get a pass without a vaccine. But if you just think about what that means, is like, now if I don't want to get the vaccine, it basically means that every other day I have to go and get tested. And so that investment of time, that inconvenience, that's a lot, and people are ultimately lazy. And so I think we're going to start to see some people overcoming their concerns around vaccines, because now it's just so burdensome to be getting tested every 48 hours. I think France after this was announced, France set their daily record. It was like the first time they exceeded 1 million vaccine appointment registrations in a day. So this is going to be an interesting policy. We'll see how it's adopted in other countries, and potentially how it's adopted here in the States. Clearly here in the States, to go to a lot of indoor concerts and indoor venues, they're starting to require vaccines, or they're having vaccine sections and non-vaccine sections. So we'll see how these things roll out, but we now have this, we're going to have this continued need to prove that we have some form of status. And I think that now perhaps brings me, and maybe that's the segue to the next segment, if we could please, drum roll. Right. So my prediction, my prediction is that we're now going to see that COVID passports and just other proofs of records, or you call it attributes or records, that this is now going to lead to adoption in the next, may not happen this calendar year, but we're going to now see COVID passports and records related to health and our ability to travel and move through physical spaces. These things are going to really, these sort of different trends or themes are going to converge, and it's going to lead to the adoption of both decentralized identifiers and verifiable credentials. It's really something that's well built for this. These are open standards meant to integrate with the mobile devices that pretty much everybody is carrying around today. You can still do the KYC and the identity verification before you then issue that record to that identifier, before you issue that verifiable credential. And it's a technology where the verification costs are zero, right? That those cryptographic signatures in that device provide the chain of custody for that attribute. You can see who issued it, whom it was issued to, and you can verify for basically zero. And so this is going to be, I do think that this is where we'll start to see some of the SSI or the decentralized identity community. I really think that they're going to start to deliver on some of the hype that's maybe died off from that sort of first blockchain and identity hype cycle that really got going around 17 and 18. It's really something an idea whose time has come, and this will be a good distribution mechanism for it. It's a way to avoid, it's so critical that we have the ability to prove these things digitally, and we want to make sure that we minimize vendor dependencies, points of centralization, which both attract economic rent seeking as well as attackers. They become attack vectors, and so this is really a good way to distribute these records and these claims in a way that's really aligned with the public good. And so that's my prediction, and maybe that's probably one we need to check back on. It'll probably take a year, 12 to 18 months before we can really. That's what I would say is the kind of evaluation timeline for this prediction, but it is one that I feel good about.
Yeah, I think, look, that prediction definitely groks. Right now, I think we are also seeing a lot of people talking about their post-pandemic response, since we're still in this thing. We're still in this thing in a pretty meaningful way. So, I think that, to your point, we're probably not at all close to the end of the innovation pipeline around this stuff. Cameron, I see an Apple image. What, you always going to just back Apple on your predictions? Come on. What do you got now with Apple? What are you thinking here? What's your prediction?
So I don't know if I would call it backing Apple. Let's say that my prediction is that I think Apple's foray into digital identity is actually going to be a rising tide that hopefully lifts all ships across the industry. Taking a step back historically, we have seen that when Apple decides to embrace a technology, that typically means that they drag the rest of the industry, as well as drive consumer adoption of that technology. We saw it with biometrics when Apple launched Touch ID and Face ID, brought both of these technologies to the mainstream, dragged the other handset manufacturers into including these features, and really opened up consumer understanding and adoption of these technologies. I think you saw the same exact thing with Apple Pay and contactless payments. Contactless payment adoption in this country was lagging many markets in the globe prior to the introduction of Apple Pay. There was a lot of pushback from the broader payments industry around Apple Pay, the cut that they were taking, merchants trying to, carve Apple Pay out of their NFC terminals at POSs, et cetera, et cetera. We're now multiple years in, and we are now poised, and some of this has to do with COVID and some of Dave's predictions and changing consumer behavior. But contactless payment in the US, I think, has finally broken into the mainstream. Most consumers now are using some form of contactless payment at least once a month. And I think a large part of that has to do with Apple kind of bringing it to the fore. And even though everyone is not using Apple Pay, the widespread availability of those contactless POSs and the push for other manufacturers to include contactless payments and credit card issuers to start putting the chips directly in cards to serve as an alternative to Apple Pay served as a catalyst that kind of pushed contactless payments out into a higher plane of awareness. I'm hopeful that we are going to see the same thing with digital identity. Obviously, as we've talked about before on this program, iOS 15 going to have mobile driver's license functionality. What shape that takes remains to be seen. How they're going to integrate with all 50 states and their individual DMVs remains to be seen. But given that Apple announced it, I'm hopeful that means they're going to be able to execute. And if they do execute, I'm hopeful that means that the pipelines and connectors that they built for mobile driver's license, issuance and creation can be leveraged by other platforms. So because of the fact that Apple kind of went in there, started blocking as lead blocker for getting connections to state DMVs, hopefully other platforms are going to be able to leverage those as well. Hopefully other platforms are going to be able to integrate with TSA and facilitate digital transmission of identity credentials to the TSA. And hopefully even for consumers that are not Apple consumers, people who either don't trust the platform or just don't like Apple's hardware, they are going to see how good digital identity looks in practice for consumers that are using these platforms through Apple. And they're going to push other platforms to meet their demand for digital identity and bring those platforms to market. We have a pretty good hunch that Google is going to be launching something similar in the space. I think you could argue that Apple launching also lit a fire under their butts to make sure that they're now out in market in a similar time frame. So all in all, while I believe that Apple is not going to be able to tackle the entirety of this EID market by virtue of their walled garden approach, where I do have hope is that the progress that they are making is going to soften the landing for competing platforms and hopefully drive broader consumer awareness for and demand for these EID solutions.
Not a bad prediction. I always bet on Apple. I think next week or next month we should definitely dig into to mobile driver's licenses. And if you guys agree with us, send us an email. Make sure if there's other topics that you guys are thinking about in addition to mobile driver's licenses, let us know. Because Cameron, I think what I'm hearing is from this, a lot of this is going to be dependent on the rollout of MDLs and how successful those are using the Apple ID. So let's move into my prediction. Last prediction here is really about where the market is heading. After last month, I got, wouldn't call it hate mail, but some questionable mail around my, I guess, less than highly optimistic view on the market and its growth and how there's going to be some consolidation. I'm going to go ahead and double down on that consolidation. I actually think that there's a lot of really great technology players out there right now that are just a few months behind their competitors. They're hitting all the great numbers. They're getting really great traction. They have really amazing technology, and they're going to be acquired by some of those larger first movers that were able to attract big investors early on. So kind of along the lines of Dave's comments around these $100 million raises, and we're seeing these war chests kind of growing. I do expect fully to see a lot of really great technology companies exiting or joining forces with a lot of these highly strategic first movers in the space. So kind of calling out some of those bigger players that you can likely expect us, the ones that we talk about all the time, the Jumios, the Mitechs, the Onfidos, the LexisNexuses, the Experience, still picking up a lot of these really great technology vendors and technology companies through acquisition to kind of grow those portfolios. And then also a second kind of prediction around the consolidation of these players is really around these first movers starting to merge together and going public. These companies have really great valuations, very large valuations. They all just get, many of these companies just had amazing years in 2020 and are breaking records. I believe Jumio just announced 150% growth from Q2 last year to Q2 this year. I mean, these are huge numbers when you look at their revenues and you look at the size of their companies. These are great companies, amazing companies, and we expect these companies to look at an IPO in the near future, or some form of public entrance, whether that's through a SPAC or a traditional IPO. And also, we see these companies as really great merger opportunities for other companies in this space. So keep your eyes peeled. My prediction here is, first step, acquire some really great technologies, a lot of companies that were just maybe a few months behind in the fundraising kind of frenzy, being acquired, joining forces with some of these first movers, and some of these first movers merging together before going public. I think this will kind of consolidate a lot of the space from that perspective, and then also open up a lot of new opportunities for new innovation in the space, as there will be a lot of cracks between these organizations that will not be being focused on, as a lot of these companies focus on IPO. All right, I'll open it up quickly. Cameron, any last thoughts, comments that you want to touch on?
No, I think I hit on most of what I wanted to cover, but look, really exciting time for the space. I think the next couple months are going to continue this accelerated pace that we're on of the market continuing to shake out, winners popping, raising lots of money, and platforms that are getting squeezed out on the bottom, maybe getting rolled up, as we see this land grab continue to play out.
Yeah. Dave, any last thoughts?
My thought is that I think people should look. I think a lot of people are going to be going on vacation in August. Obviously that happens every year, but this is now the pandemic. A lot of people are vaccinated. I think a lot of people are going to travel and kind of check out and regroup a little bit after what's been a very challenging time. So I expect the news. I expect the news that it's announced next month in August to be a fraction of the activity that's actually happening. And I think when we're back here at the end of September, I think we could be seeing instead of seeing two $200 million rounds on the deal roundup, we could have a whole page of just $100 million mega rounds, or maybe even some big M&A activity there. So I think when we all regroup at the end of summer, I think it's just going to continue to accelerate just the pace of activity and the magnitude of it.
Yeah, that's definitely worth calling out. The Great Vacation, as I've been hearing it referred to as. So, my wife keeps asking. She's like, when I thought there was this great vacation that's happening. I'm like, not for the consultants. Yep. All right, and with that, we're gonna have some great upcoming events throughout August and September. So while you're all on vacation, that great vacation you have, on August 10th, make sure you put this on your calendar. We're gonna be talking about phone-centric identity and behavioral biometrics. Our very own Director of Research, Nick Holland, will be leading this conversation with our partners, Prove. I think this is gonna be a really interesting conversation. Of course, we talked about Prove last month with their acquisition of Unify ID, bringing that behavioral biometrics component to a lot of their pre-filled technology and phone-centric SMS OTP that Prove already has. And then, of course, you can see here, we will be back on August 24th for another Investing in Identity forum. We're going to be talking, obviously, about the deals, the trends, and our future predictions in August. And then September, probably, as Dave already just alluded to, will be quite a busy conversation for our Investing in Identity forum. So with that, if you guys have any other questions or just want to get in touch with us about any of the deals here or any deals that we missed, or just want to talk about market trends in general or how we can help you, please do reach out to us at info@oneworldidentity.com. Would love to talk to each and every single one of you. Also, if there's any conversation pieces, trends like mobile driver's licenses, let us know. We'll definitely add those on there and dig in, and we'll turn Cameron on full speed for those conversations next time. And with that, I want to thank Cameron and Dave for joining again, and everybody have a great rest of July. Thanks, everybody.